Welcome back, everyone. Right now, one of the biggest Bitcoin buyers in the world may be running into a serious problem that almost nobody was expecting this quickly. Strategy, the company known for aggressively accumulating billions of dollars worth of Bitcoin, suddenly appears to be losing the financial momentum that helped fuel its massive buying spree. And for the first time in quite a while, there is now growing discussion about whether the company could actually slow down Bitcoin purchases or even sell part of its holdings to handle upcoming financial obligations. What makes this situation even more important is that multiple pressure points are now hitting at the same time. Financing costs are climbing, STRC issuance has weakened, preferred dividend pressure is increasing, and MSTR may no longer be trading at levels where aggressive Bitcoin buying remains as effective as before. That does not automatically mean Bitcoin or MSTR stock must collapse. But it does create a much more fragile setup than many investors currently realize. Because if Strategy's buying power continues slowing down, the market could lose one of the strongest sources of consistent Bitcoin demand it has relied on during recent rallies. So today we need to break down exactly what is happening behind the scenes, why Michael Saylor recently discussed the possibility of selling some Bitcoin, how rising financing costs are starting to create new pressure, and why the next few weeks could become extremely important for both MSTR stock and the broader crypto market. This content is for educational purposes only and should not be considered financial advice. Strategy may temporarily slow down its Bitcoin buying activity, and there is also a possibility that the company could sell a portion of its Bitcoin holdings before the end of the month. Even with that possibility, the company stated that it still plans to remain a net Bitcoin accumulator over the long term, even if some higher-cost Bitcoin is sold. Another option available to the company would be paying upcoming dividend obligations by using cash reserves from the balance sheet instead of raising new capital. Michael Saylor also explained that paying dividends with Bitcoin instead of issuing additional MSTR shares could be considered slightly credit negative. That is because the company's Bitcoin collateral would decrease compared to a scenario where more shares are issued to raise capital. As a result, financing costs could become somewhat higher relative to the company's Bitcoin holdings. The situation would likely appear stronger if Strategy was still aggressively purchasing Bitcoin through STRC preferred stock issuance, since heavy buying activity can sometimes help support market momentum. However, STRC issuance has slowed significantly for now. Another important factor involves the dividend structure tied to STRC preferred shares. If STRC trades at or below 99.49 on a volume-weighted basis between May 1 and May 28, the dividend rate on approximately $10.5 billion worth of outstanding STRC preferred shares would rise by 0.25%, increasing the yield to 11.75%. That possibility became more realistic after STRC dropped to 98.59 earlier this week. If triggered, the higher dividend would increase annual financing expenses by roughly $26 million. MSTR stock moved lower in early trading Tuesday after a notable decline during Monday's session. At the same time, Bitcoin also pulled back, while spot Bitcoin ETFs experienced minor weakness as well. Following the latest STRC issuance, Strategy's estimated annual financing expenses now sit around $1.7 billion. That equals roughly 2.7% of the company's Bitcoin-related value. Much of this comes from preferred stock obligations carrying dividend rates near 11%, while the company's convertible debt maintains a far lower average interest rate. This is significant because many Bitcoin ETFs charge management fees closer to 0.1% or 0.15%, creating a major difference in financing costs. Even so, investors continue valuing Strategy at a substantial premium compared to the value of its direct Bitcoin holdings. The company also faces a dividend payment of roughly $90 million at the end of the month tied to STRC preferred shares. Historically, Strategy often handled these obligations by issuing additional MSTR shares. However, during the May 5 earnings call, Michael Saylor suggested that selling a portion of Bitcoin holdings could become one method for covering preferred dividend payments. Strategy recently completed a major Bitcoin buying wave worth nearly $2 billion. But current conditions suggest that pace may slow considerably in the near term. That does not automatically mean Bitcoin or MSTR must continue falling, but it does create a more uncertain short-term environment. There are still several outside factors that could improve sentiment, including positive geopolitical developments, regulatory progress related to crypto legislation, or broader strength in major equity indexes such as the Nasdaq 100. Even so, One of the biggest concerns right now is that Strategy's Bitcoin purchasing power appears weaker than it was only a short time ago. The company mainly funds Bitcoin purchases through two methods: issuing STRC preferred shares and selling new MSTR common shares. Both are typically offered through at-the-market programs, allowing capital to be raised whenever market conditions are favorable. When STRC traded above 100, Strategy accelerated Bitcoin buying activity aggressively, supported by nearly $1.95 billion in STRC issuance. But after STRC dropped below par value, the company slowed additional preferred issuance, and the large buying wave quickly cooled off. Strategy still contributed roughly $84 million toward Bitcoin purchases through the sale of over 430,000 MSTR shares. However, the company generally follows an important guideline when issuing new common shares. Management typically prefers issuing shares only when doing so increases Bitcoin per share for existing shareholders. At recent market levels, MSTR appears close to the threshold where additional Bitcoin purchases through common share issuance may no longer improve Bitcoin per share unless extra financing sources are available, such as cash reserves or renewed STRC issuance. Because of that, Strategy may significantly reduce Bitcoin purchases for now, or potentially remain much less active in the market until conditions improve. So, if you found this video valuable and want to stay ahead in crypto, market trends, and smart investing strategies, make sure to subscribe to MSTR Hub. Don't forget to like this video, share it with others, and drop your thoughts in the comments. Is this a real opportunity, or just another risk? And most importantly, hit the bell icon so you never miss an update. Thanks for watching, and remember, smart moves build strong portfolios. MSTR Hub, where market insight meets strategy.